What is up, everybody? Welcome to another edition of the Trader's Mind Chat live show. Let me know what you thought about that intro. That intro was brand new. Let me know where you're watching this from. If you're watching it from Twitter, YouTube, Facebook, or over on ShareVision, let us know. We've got some great stuff to chat about today, mainly developing sit with power. You may have heard of developing sit out power. Today we're going to be talking about sit with power, and there's really three things that are that we're going to talk about in sit with power. Scott, good afternoon. Um, there's three things. The three things include mindset, includes treating trades as individuals, and we're going to be walking through some real life examples. So first, let's talk about mindset. Let's jump right into it. So when we're thinking about mindset, there's a few things to think through. Well, when it's when you're developing this sit with power to not get shaken out of trades. One that and you guys chime in too, right? But because this is meant to be interactive. The first thing that comes to my mind when I'm thinking about developing the sit with power is being open, right? So number one is being open to any outcome, right? So there's lots of outcomes that can happen in a trade, right? A trade could blast off and go to the moon, right? Like that. That's always what we hope for. Um, a trade can just kind of drift sideways. Maybe it drifts higher. Maybe the trade starts to drift lower, or maybe we buy the thing and it just sinks like a stone, right? Like we could be any one of those things. Uh, when we enter the trade, we need to be open to all possibilities. So the first thing when it comes to having the right mindset to have this sit with power is being open to all the different outcomes, right? And allowing it to develop as you're in this trade. The next thing that you want to start to think too is having a level of attachment, having a level of detachment from the outcome, from the trade. You put the trade on, you are not attached to the result. Um, how do you do that? Well, and what does that even mean? Part of it comes from understanding that it's not this one trade that's going to make your equity grow, right? It's not this one trade. It's not that one trade. It's not the trades from the past. It's trades over time. It's trading your system that should allow you to continuously see your account grow. So there's one trade doesn't matter. Yeah, Scott's point. What Jim Ropel says, right? Well, what does Jim Ropel say? Jim's a great guy, hedge fund manager, somebody that we've interviewed a bunch of times on the show. Jim says that you need to have detachment from the money, right? So having detachment from the trade and the detachment from the money too, right? So let's write both of those down. Great point. So detachment from outcomes, detachment from money. And how do we do that? Right? How do we have detachment from the outcome and detachment from the money? Right? Because if the money is too dear to us, then we're going to make poor decisions. So, what are some ways that we could be detached from the money? Go ahead, type it into the chat. Let me know. Some of the things that come to my mind for having detachment from money has to do with position sizing, right? Like if I'm going all in uh, with my account, then I better be okay with that account going to zero, right? It's kind of like what Jim said in the last live stream. Like if he was trying to uh, grow an account rapidly, grow a small account rapidly, then he might cowboy it up. But in that, there's a certain level of detachment from those dollars. Like it's not the putting money in, and if this doesn't work, then I'm not eating tonight, or my family might get kicked out of our home. Right? Like we're not playing well with that kind of money. It's taking money that that's earmarked for trading, that's earmarked for risk. Not that we want to be reckless with this money, but to that it's earmarked for this specific purpose. So we're not attached to these dollars. We're attached to the process and in following through on the plan. And in following through on the plan, we're not attached to the outcome of that plan, right? Because it's in following the plan for not just one trade, not just 5 trades, but for 20 trades, 50 trades, 100 trades. How many trades over the course of your life? Be attached to the process, be attached to continuously improving the process, not the outcome of individual trades, right? So detachment of outcomes, uh, and we'll say from individual trades. From individual trades. What else? What else is good to have on here? Yeah, Scott too. Scott, you're on fire today. From being right or wrong on a trade. Yeah, right. So if you are in a trade and let's say you start to have a bunch of winning trades in a row, right? Like that. That's what happened to me over the past maybe 3 weeks, and we'll go through some of my own personal examples of how I dealt with this too later in the chat. But yeah, that's part of it. Um, so I had like maybe about like 10 winning trades in a row, dealing well with the okay, like this is nice, but it is an anomaly and it will come to an end. Just like all streaks come to an end, just like a losing streak would come to an end too, right? Like we don't want to get caught up in patting ourselves on the back too hard or kicking ourselves too hard if something doesn't go exactly our way. So attachment from being right or wrong, or maybe redefining what being right or wrong is. Being right, now the way that I look at being right is, did I follow my plan? Did I execute my plan well? And Shul, well, welcome, and Shul. We talk a lot on Twitter, and great to see you here on the live stream. So moving from expecting to reacting, that's how I like to trade. All right. Like, so I'll react, but the reactions are planned. How I'll react to each trade is planned. And I'll walk you through some examples of that as well. Let's see. What else? What else about mindset? Um, 3, a sense of stoicism, right? That kind of falls right in line with detachment. Being prepared, right? Having a high level of preparation. So we mentioned that trades can zoom higher, just kind of meander a bit and drift higher. Maybe they just move sideways. They could drift lower. They could just plummet, right? If we are prepared for each scenario, each day that we're in this trade, each week, or whatever the period is that you plan on trading this, whether it's each day, a week, a month, whether it's a few minutes, right? Like being prepared for whatever way the trade could go and knowing how you respond ahead of time, that's going to dramatically dramatically help your trading mindset. In fact, this is perhaps some of you have seen this in other live streams, but this is a sample of the daily worksheet that I give for myself and that I've given to members too. Um, so every day in the market, uh, I'll fill out one of these either in the pre-market or um, just after the market opens. It really depends on how the morning is going, and bringing my daughter to the bus stop and uh, all that. So here, right? Right at the top, getting the mind right, affirmations. That statement right up here, this is, I write this every single day to drill it further and further into my mind. The market is an infinite stream of opportunity. Just in that one statement, it helps me to remember that, yeah, you know what? Like, if any of these trades go against me, it's not the end of the world. The market is an infinite stream of opportunity. The only thing that I need to focus on is my plan. And the same thing is going to be true for everybody. If I make a mistake, the market is still an infinite stream of opportunity. So rather than kicking myself and beating myself up over some silly mistake, learn from it and then bring that education to the next trade. And so I'll do that. Then I'll go through each of my open positions, right? So I have uh, these six plus another 3 over here, so I've got 9 open positions right now, and I've planned out what will I do in each case if price rockets higher, drifts higher, moves sideways, drifts down, and rockets down. And you'll also notice too that it's not really just 5 things that can happen, right? 5 things. It's more than that. It's really 15 things altogether. Right? Because what happens if price rockets higher, right? Come back over to this. What happens if price rockets higher but closes at the low, right? It'll be a very different feeling than if it closes up here at the high. Same thing if the price rockets down, right? Very different feeling if it rockets down but closes at the high of the day versus closing at the low of the day. So figuring out, like thinking through ahead of time when you're in a peak state, whatever time that happens to be for you, when you're in a peak state, do this kind of planning. It really helps. And in fact, some of the real life example, to skip ahead a little bit, is this week, right? Yesterday I was not feeling well. I was sluggish. Like, I'm not sure what happened to me the night before, but something came on. I'm feeling a lot better right now. But um that morning, having planned out all my trades, yesterday my portfolio, well, got hit. It got hit uh, on Tuesday, and it got hit on Wednesday. Yeah, like the entire account was down maybe about 2-3%. It's not nice to see that in your, especially what in your main account, or at least for me, not in my main account. I don't particularly like seeing that. I've seen worse, but yeah, part of it, if I had not planned ahead with these kind of sheets, I might have been more likely to puke up my positions. But because I had thought through and planned ahead, the only thing that I needed to do at the end of the day was just go into autopilot, follow the plan that was here. I already thought through all the different scenarios, and that's it. So preparation is going to be key. See, had some another comment here from Scott. Scott says this opportunity mindset on the market helps prevent fear of missing out. Uh, it sure does. It sure does. And yeah, that affirmation uh, every morning. Every morning, I'm drilling that into my mind. And if I need to fill out two of these, right? If I'm filling out two of these sheets, I'm writing it on both of them, so I'm getting double, right? I have a lot of positions. It's important to drill that into our head. Remember these important things. All right. So we spoke about mindset quite a bit. Any questions on any of this so far before we move on? We could always come back to. Next up is treating trades as individuals. What do you think that means? Treating trades as individuals. I'll tell you what it does not mean. It does not mean that we should start flip-flopping our strategies, right? Like if you're somebody that um, likes to be a range breakout trader, right? Like so let's say you're like to you see price in this range and you'll buy the breakout. That doesn't mean that now treating trades as an individual, well, now all of a sudden you're going to start buying at the low of the base, or that you're going to switch from being a growth trader to a value investor, right? Like I'm not talking about that. What I'm talking about is trading treating trades as individuals within your system, right? Like so what is uh, what often happens is that especially in the beginning, if you're just starting out, treating each trade exactly the same is going to create some good routines, some good habits. Where let's say, for example, like here's a trade that I'm in right now, right? So it uh, was a volatility contraction pattern where it started out volatile over here, and it started to contract in each of these areas, and then it started to break out over here, and now it's moving into new highs ahead of earnings. So if you're used to trading in one specific way where it's just like, okay, I will uh, sell any trade if it falls below the 50-day moving average. And let's say that you bought this trade back here, let's say, right, where price was a lot closer to the 50-day moving average. Then you might like price right now, like it's what's different about it, right? Like it has gotten some support around there, but has the character changed? Has the character changed at this point? I would argue that it has. I would argue that it's getting support consistently around its 21-day moving average since this point back here, right? Like since it rallied off of the 50, it came up, it consolidated again. That little consolidation there consolidated right around that purple line. That's the 21-day exponential moving average. Then it ran up, it broke out, it started to consolidate again, and where did it pull back to? Right back to that 21-day exponential moving average. So, in my mind, if I'm trading this, it needs to be able to test that moving average. And when it starts to break that moving average, that's when it's starting to lose character, or starting to change character. So, in that regard, I would uh, I would want to be able to give this trade what it needs, right? Versus, let's say, let's look at coin, right? So coin is a trade that I started right over here, right when it broke above uh, this double bottom, right? Do you guys see the double bottom? There's the first leg down, here's the second leg down, had a little bit of a handle over there, and I got in on this day over here. From there, where do you see support being? Where do you see a support? What does this trade need? What do you think this trade needs as far as the moving averages go? So far, it's getting support on and around the 5, that thin gray line. Also, the 10 is kind of catching up. So for now, that's what that trade needs. So rather than using a blanket rule of like, oh, I'm just going to always sell at the 21-day moving average, I'm always going to sell at the 50-day moving average. For here on this trade, if that's your rule, you're looking at a 17% drop. Whereas on this trade over here in DFIN, you're looking at an 8% drop if you're looking at the 50-day moving average. Or if you're looking at the 21, right? The 21, you're looking at a 4.5% drop. On coin, if you're just going to use the 21, then over here you're looking at a 10% drop. Are you willing to just blanketly uh, trade based off of like a very strict criteria, treating every single trade exactly the same? Or is there some wiggle room for individuality? I think that there is. And in treating each trade as an individual, that's how you're able to get a lot more out of each trade. Treating each trade as an individual, giving it what it needs, not just what you need. Um, Part of that too, though, is figuring out where and how you're going to exit trades too, right? So figuring out where you might start to sell, right? I think that that's another conversation. This is selling on weakness, like if it starts to break below a certain moving average and giving it what it needs to grow, kind of like a plant, right? So here's an example, right? Like a gardening example. Anybody do any gardening, or do you have any pets or anything like that? Treating it as individuals. Like sometimes, like if you have a plant, like all plants need a certain level of water, all plants need a certain level of sunlight, they all need soil. But if you try to water, say, uh, if you try to water a cactus like you would water your grass, it's not going to turn out too well. Um, yes, Scott has a couple of dogs. If you try to give uh, a small dog a large amount of food, or a large dog a small amount of food, it's not going to work out. Like they both need food, but you know it, you need to treat them as individuals. They have their own unique set of needs, their own unique personalities. Same thing goes for trading too. So you know how to care for dogs, you know how to care for plants, you know how to care for trades. It's just finding the nuances in each trade and planning out how you're going to treat each individual trade. So yeah, and not doing more than what's necessary, not doing less than what's necessary, just doing what is necessary. Jose asks, "Is this my main strategy? This is my main philosophy. Um, Giving trades what they need, giving trades the right position sizing too, right? We spoke a little bit about position sizing earlier. Uh, that was in the first part, well, with mindset as well. Um, to go back to the mindset component and how to treat like all these trades here, right? When you're entering a trade lot, like I've been long crypto. We spoke about crypto yesterday. Uh, the mindset that I have going into crypto, a lot of it had to do with position sizing and understanding what each of these ideas need, right? Understanding that something like Doge, it needs a lot of room to be able to move around, and that as crazy as a day as this is, being up 35% right now, it's it it's kinda crazy to think about it, but it's within the normal range of crypto. So to not get overly excited, to not get overly, pessimistic when something, like this day happens, right? Like, so I held through this, eh, to understand how, things move and to not be too caught off guard, when they do. Part of having that level of detachment is again has to do with some of it has to do with your position sizing, some of it has to do with your mindset and writing down uh, affirmations. It's not all one thing or all something else. Like it's all of it, right? It's all of it. It's just like it's similar to physical exercise, right? Like, so let's say, yeah, you want to get in shape. You go to the gym. You wouldn't just like go and do bicep curls and that's it, right? Like you've got to work out everything. Um, that's basically uh, what we're doing here. Let's see. What else? Um, and Shul, there should be a set of meta rules for each trade type with room for customization. Uh, yeah, yeah, I think that that's a good way to think about it. So it's trading with principles and then having I like to have a smaller set of rules, like rules. Like like a rule for me is I'm going to follow whatever is part of my trading plan. I will plan out every trade before I put it on. I will follow my risk formula. If you haven't seen my risk formula, I've spoken about it in other live streams. Very briefly, it's taking the trade grade, multiplying it by the current market condition, and that's going to tell me how much risk I should put on. Should I put on a full amount of risk, half that, or even a quarter of it? Lots of things in there. All right. And let's talk about some real life examples too of how this played out, and having this kind of mindset and this kind of approach helped me sit with a few ideas. So back here, right? So this is, by the way, if you haven't seen this before, this is what I call a market mood log. Every day I'm tracking what the market does on the monthly timeframes, weekly timeframes, daily timeframes. I'm tracking distribution days, a whole bunch of stuff in here I'm tracking each day. It looks like a lot. It actually doesn't take me all that long to do. And I also color code, well, what kind of condition the market's in. Is it green? Is it yellow? Is it red? Well, back here on October the 5th, did I start to get long? No, yeah, on October 5th, that's when I started to get long. Uh, I was completely in cash on October 4th, and for most of the week beforehand. So let's look at the market. Here's major indices. Here is the S&P. So That's October 4th, so I'm in cash over here. I start to get long on this day, October 5th. And I kind of felt a little bit like man on an island that day because um, so many of the people that I look up to were bearish on the market that day. I don't want to name names, but there were plenty of people that were bearish on that day and over here as well. And like I kind of felt like a man on an island a little bit because what I was seeing was I saw stocks that were setting up. And so I started to buy some of those stocks. And some of the ones that I was in, the first ones were WCC, DFIN, and Upstart. Right. So let's take a look at each of those. So WCC on October 5th. Right. So I buy it here. And then what does it do? Right, I buy that breakout. What's it do? It squats. It moves sideways for 1, 2, 3, 4, 5, 6. I have to wait 7 trading days just to get back to even, and I'm sitting with that. And you might say, well, why? Well, why sit with that? How could you sit with that when the market looks like this and it's pulling back? It looks kind of gnarly. Other people are talking about that there's so many stocks underneath the 200-day moving average. Why? Well, part of it goes back to giving the trade what it needs, right? So when I'm buying over here, what does this trade need? Right? Well, it needs the 21-day. It potentially needs the 50-day. And so my stop loss is down here at the start of this. And my stop loss is down there. So it pulls back, and I'm filling out my little log sheet from earlier. And on this day, what did it do? It rocketed down, but it closed off the low, and it actually found support. It closed above the 21-day moving average. Great. So that's actually a positive thing. So I'm still sitting with this, and I'm still sitting with it as it's just kind of gradually moving along. That day is just like, oh, like it closed on its low and it closed below everything. But at this point, it's still in my mind, yeah, it still needs the 50-day moving average. So I'm letting it go, and then it starts to work out. But it's giving the trade what it needs, not what I need. Uh DFIN, right? Also October 5th, right? No, this one I bought on October 6th. So over here, breaks out and it starts to work, and it's just kind of drifting, right? It's drifting its way higher. That one's a little bit easier to hold. Then Upstart, right? So Upstart getting long this on October 5th, like right over here on this reversal. That ended up being a monster trade. But part of this too is, right, like you're listening to the market. You're listening to the stocks. You're looking at what is setting up on your watch lists and trusting that process. And it doesn't matter what anybody else has to say, right? If you trust your process and you have this level of detachment from the money, right? Like, so if you're attached to the money, you're going to be in this trade. Like, so let's say you're in over here, and then it's just like, oh, great, I'm making money, awesome. What should I do with this? Uh-oh, it's starting to come in. Well, what does somebody on Twitter have to say about this? I'm unsure. Let me check the news. Right? You start to worry versus trusting whatever your system is, whatever your process is, and trusting that, like it doesn't really matter what Upstart does, right? Like in both the literal sense of like what does the company do and what does the price do? Does it matter? No. Why? Because you're you're trading a system, right? Your system will tell you what to do. So that's basically how I was able then to sit through this back here, right? So sitting through, so go back to the sixth and looking at this over here, right? So over the weekend, I was long 5 trades. Only one of them was positive going into that weekend. Now that's kind of rough. Yeah, I'd be lying to you if I said that I was comfortable or completely comfortable. But at the same time, the trades were all behaving properly. Like none of them had stopped me out. Um, the action in them was not ideal. Ideally, they would be profitable, but they were many of them were meandering around, and that's okay. Having giving the trades what they need, having a level of detachment from both the trade and from the money, realizing that the market is an infinite stream of opportunity. And so what I need to do, my job is to give it what it needs, water it the way that it needs to be watered, feed it what it needs to be fed, not just well what I want right now, right? If you try to demand from the market what you want right now, it's generally that doesn't work out too well. And then what happened the following weeks? Well, here's what happened, right? So following week, the trade started to get I started to put on more trades, and they started to move into the higher win rate. They started to become more profitable. Then another week goes by. Almost every trade is in profit, and I'm keep on adding to my position. Then I'm on. I'm just about on margin with this, and like every trade is working out. Had I listen to other people and not my system, then I wouldn't have been in that, and I would maybe I would have, who knows, right? But the idea is to follow your system, follow your plan, for better or worse, and to trade with a size where it doesn't matter if you are wrong on this trade or wrong, or if you have a losing streak. It shouldn't be. A loss should not be a crisis of faith. It should be a learning opportunity. So allow the trades to do what they will and have a plan on where you'll cut your loss, where you'll start to take profits. And yeah, like it's all these kinds of things that we discuss a lot more in depth, right? Like we've already been going strong now for about 40 minutes, but these are the kinds of things that we have like an entire training library over on marrowwealth.com that our elite members get, and we do live coaching twice a week. It's great. Let's see, we've got some questions coming in. Let's see. Got a bunch of questions here. Let's see how many we could get to. Um, Jose says, "Can you share your logging journal spreadsheet?" Yeah, yeah, I actually do. So I did 2 live streams on this one actually. So if you go back in the channel, there's 2 live streams. Well, one is talking about how to make your own trading journal for free in Google Sheets, and I walk you through this entire sheet and all the different tabs and everything. And then there's another one that's talking about statistics and formulas. And uh, if you want to build this yourself, you absolutely can. If you want to save yourself some time, join the Elite membership. They get this sent to them for free, and it's updated, and you could go and make a copy of it for yourself, right? So you're getting my notes, plus you could go and make a copy of the sheet, and then you have your own journal that is continuously getting updated because, like, my journey is not over until the day I die, and hopefully that's many years from now. I'm going to be 42 in about a week. So there'll be plenty of more updates to this sheet as I learn and grow too. So um, that's about that sheet. Let's see what else. Um, yeah, so that you can't get one set up. Yeah, so that would be the best thing to do then. If you want a trading journal, if you like this, then just sign up for the Mara Elite membership, and you'll get this right away. Let's see. Scott says, I have a stock dropping like a rock right now near my stop. Not emotional, as I already have the stop in place and logged into my Excel, not allowed to touch it while the market is open. It's great. Keep following the plan, man. That's perfect. Like so. So here's what can happen. So often, right? So let's say like here's Upstart, right? Upstart's having a bit of a rough week, right? Like so, it was down last week. Was down at the beginning of this week, but now look at it, right? So far, it's finding support at the 10-week line. It's closing off its lows. And let's click this button over here, price stats. This tells you where it is in its closing range. So right now it's closing in about a third of its trading range. Something that I learned a long time ago is that when price closes in about the third of its trading range or a little bit better than that, then that's a potential sign of weakness that's getting bought. So it could be a positive. Now, that's what it happens to look like today. We still have another day to go, right? So anything can happen tomorrow. But at one point, price was all the way down there and it looked gnarly. So following whatever your plan is, and if it is something that's at the end of the day, or if it's at the end of the week, let's say, wait until the bar is actually closed because it could look dramatically different at the beginning of the day as opposed to the end of the day. Same thing at the end of the week. Let's see what else we got. Confluence Trader. How can we use relative strength for intraday trading? Great question. Just going to take a quick sip. Okay, so here's how I like to use relative strength for intraday trading. And this is how, if you go back on the channel, I actually did a video of how I was able to generate. This is going to sound fake, but I assure you it's not. And if you go check out the video, you'll see the proof. 12,000% day trading. Believe it was 2 years ago. Yeah, go check out that video. So what I did to have those kind of returns is exactly this right here, using relative strength for intraday trading. So when I'm looking to day trade, what I would do is I want to trade stocks that have the best relative strength. So I would be looking to trade something like this, right? Like Tesla, right? Like Tesla is at fresh all-time highs. um, if you are long term, or if you are even a swing trader, it would be hard to enter right here, right? If you're a swing trader, trading like range breakouts and regular chart patterns, like a cup with handle or flat base flags, those kind of things. Uh, Part of what you're looking at is where are you going to exit the trade if you're wrong. So on Tesla, and I do own Tesla. Tesla's in my long-term account. I'm in from somewhere in this neighborhood back here. When it started to climb back above the 50-day moving average and get support. Actually, yeah, not over here. It was over here, right when it broke back above the 50. So I'm long from back there. But right here, this is great for day trading. Why? Because it's showing that it's now one of the premier leaders in the market. So all the different patterns that you're looking at will show up on intraday charts, right? So here's a 30-minute chart. Well, let's go to a 5. right? So here's the beginning of the 25th, right? So that massive gap up pulls back, then it runs up, then it starts to pull back over here. And if you're looking at this on a 5-minute chart, well, what does it need? Right? Talk about, well, what it needs. Well, it comes here, kisses the 21-day moving average, and then it starts to rally. Right? So this is how I'm using relative strength intraday. I'm going for the ones that have relative strength on the daily time frames, the weekly time frames, finding the leaders, and then saying, okay, how would I enter this? So if I'm entering on that descending trend line, or even at the top of that bar there, be able to enter with a 1% stop, and then you let it run, right? Like, so it came back, it tested the 10 EMA, and it basically held the 10 for a while here, right? So this might even have been one that's possible to hold overnight. Although I don't really like holding. Yeah, I wouldn't hold a day trade overnight, because the intent is for it to be a day trade. But you could have entered over here at about 11:30 ish, and sold at about 2:30. I'm talking Eastern time. Right. Well, when it's starting to get extended, part of what you would look at too is like, okay, is it getting extended? Yes. What's my average gain? Those kinds of questions are good to ask. So if your average gain, so this generated 6R, right? In this idea. If your average gain is, let's say, 2R or 3R, then you should be starting to scale out, and maybe you're letting the last little bit of it run. See, I'll take one or two more questions. Scott, what are your immediate thoughts on Monday? Monday. Monday looks like it's pulling in. And this is one that I have over here too. Monday is pulling into the 50-day moving average. So if we're talking about what does each trade need, this is a trade that has gotten consistent support at the 50-day moving average. Uh, is it do I like this action? Well, I would be lying to you if I said that, yeah, like I love it when stocks pull back and I start to think about my P&L or things like that, but it's not about any of that. It's what does this trade need? So what this trade needs is the 50-day moving average at this point. If it starts to break and close below the 50-day moving average, which it, by the way, it hasn't done yet, right? Like it's walked along the 50-day moving average. It breached the 50-day moving average over here, but it hasn't closed below the 50-day moving average. I would want to give this thing the 50, and if it does break down, that then it breaks down. But it's also why I like to scale out on the way up. So you can see over here that I took off a third when I made 1 times my risk. And that's my general plan. Like I'll scale out a bit at when I have 1 times my risk, scale out a little bit more when I've made twice my risk. And then the last part I'm letting work for as long as it's willing to work. Yeah, Jose is saying that he's had a lot of paper cuts. It's been a challenging market. It's definitely been a challenging market. Well, what I would suggest doing, Jose, is taking a look at your trade. So if you are, you had mentioned before too that about journaling. So you definitely want to have a journal. So that way you could go back and see what trades did you take, why did you take them, have a variety of notes, right? Like so look at some of the close trades over here, right? So like it's not just the date, it's the well, what setup, what was the stage, general gut feel. Like that, these are things that I'm logging for each trade. notes on the entry. The, I'll annotate the chart, right? So GFL. Let's open up this one. Right. So this was another one where it ran up, right? It was getting support at the 10. So I decided to cut it back here when it lost support at the 10 and it was closing at its lows. So still a winning trade, locked in some of it, and that's how I ended up managing that one. But tracking your entry, your target, how much you're risking, market conditions, uh, lots of things in here. High watermark, low watermark. Uh, that's how high did the price go in your favor while you were in the trade. The low watermark is how much did the trade move against you while you were in that trade. All good things to keep track of. Yes, Scott. Scott, great suggestion here. Um, Saying that currently digging yourself out of a hole by all these paper cuts, been trying to slow down trading and found better success so far. Yes, so slowing down, right? Like often doing the opposite, right? So if you are over trading, slowing down is a good thing. Um, Modeling success, finding somebody that's done what you're trying to do, and then being around those types of people that's why I like to do these live streams, right? Like bring other people together. You already found a potential buddy over here in Scott. Great. Like that the community is here and it's growing. So yeah, the more that you're able to get around other like-minded individuals, get help, bounce ideas, you could start to see what it is that you're doing well, where maybe you need some improvement, maybe some ways to improve, and it's developing the habit, it's developing the consistency like that. That's uh, again like that. That's why I'm doing these live streams. That's why I built the elite program, and yeah, like that's what we there's a lot of success stories in there. Um, Definitely check that out. Yeah, it sounds like there's a lot in there that will definitely help you out, Jose. Let's see. Um, Spoke about the relative strength for day trading already. Um, Scott's trading Monday, very similar. All right, so we'll see what happens with that one. Um, we are uh way over. We're about 22 minutes over. Let's go until 3. If you guys have more questions, then let's keep going. Well, we'll do the full hour. If you don't have any more questions, then we'll call it a day. But we'll keep going for the full hour if you do have more questions. Yeah, Scott, it's my pleasure. Love doing this kind of stuff. I feel very blessed to be in this position. Like, and I only quit the day job about 3 years ago, and so here's another story too, right? Like, so many people are very eager to jump into trading, and this is going to be my sole source of income. Well, like trading, it's not steady income, and you can see like how much trading can mess with your mind, especially and if it's only going to be your sole source of income, then you're really tying your emotions to the money, and it's very difficult to separate it. Well, when I finally left the day job, uh, uh, well, we had more than half a mil in the bank, and that what was like so that was it just meant to cover housing expenses. It was meant to cover housing, food, um childcare, all these different things to basically maintain our life while building, continuing to trade and continuing to uh, build build the business. I could have left significantly earlier, but I didn't because, well, like it was really fear holding me back. But in a sense, too, I'm kind of glad that I left when I did because it allowed me a lot of flexibility to say that, okay, we'll be okay for several years if needed on zero income. Uh, and it's like giving so much extra runway. I think that that's important too. If you're looking to transition into becoming a full time trader, giving yourself a lot of runway. But it's why learning to do this kind of stuff part time. It's a very important skill. I think that it's a skill that uh, pretty much anybody can learn. Scott says, I am separating from the military and start a new job on Monday. I'm worried I won't be able to dedicate the same amount of time to trading as I currently have during my terminal leave. Yes. So you just reminded me of something else, too. Let me take another drink of water here. So, Scott, this reminds me of a story when soon after my daughter was born. Like you'll see in a moment how this is related. So, my daughter is almost six and a half now, and she the greatest thing to ever happen to me, right? Becoming a dad. Uh, s- Before she was born, my equity curve was moving up and to the right, like the way that it's supposed to be moving. Um, After, it just started to chop around, and I'm like, "Well, what's going on here?" Right? Like, I'm think that I'm trading in the same way, right? But, what didn't dawn on me, and it didn't dawn on me until 6 months later, like, after, my wife and I were getting into arguments, and at the time too, um still having a full-time day job, um, trading, plus, I had another business, this, website, maybe you've heard of it, called chartyourtrade.com. I ended up selling that one, 3 years ago to start this, which is a lot more education focused, and coaching, so I had all that stuff going on, and then throwing, becoming a new father on top of it, like major life change. So I needed to adjust how I was going to trade. It sounds like, Scott, that you have an awareness that this is going to affect uh, your trading. It'll affect the amount of time that you're able to trade. Maybe it'll affect the timing. It's good to have that level of awareness now so you could start to plan around it. So perhaps think about when, like, timing that you could still put into studying, timing that you could put into your analysis or your post analysis of trades. Um, what kind of workarounds could you find? What worked for me a little bit when it finally dawned on me that, hey, knucklehead, that this is you have a lot going on here. Maybe you could outsource the research, and that's what I actually did for a year. I outsourced my research. So there was somebody else that I found that had a similar mindset to me. That we didn't see exactly right. Like nobody's a carbon copy of anybody else, but well, we saw the market in similar ways. So okay, let me buy that person's research, and I will, like that part of my routine is done. And so that's saving me several hours each day, each week. And then from there, starting to say like, well, my trading part is fixed. How about my business. And so then I got a partner. Adam Sarhan was my partner in Chart Your Trade for a little while, and then I later on sold the business to him when I started Mara. So he was taking care of many of the client services. Great. Then it's time to get my physical health back in order, because I was maybe about 50, 60 pounds heavier than I am now. Uh, so then started to get that part of my life back in order. And that's when things started to really improve, and life turned around like that. Like within 90 days, I went from a stress monster that was overweight and was starting to blow up at people, to being happy and healthy and having my portfolio back on track. Uh, so let's see, what else? What else? Scott's been trying to switch more toward position trading from weekly chart as opposed to quick swings. Um, that can work. Um, you can swing trade and position trade. So a book that you might want to read, if you haven't read this one, perhaps you have, Nicholas Darvis, How I Made $2 Million in the Stock Market. He's the guy that gave me faith when I was trading part-time for so many years. Um, what he did, um, was he was a dancer back in the 50s, and he was trading part-time at nights on weekends, and didn't want to be bothered at all during the trading day. So he would just get the paper, get like the ticker sent to him, get the stock quotes, write out charts by hand, and then would place his trades, and would send them to the broker and said that if it crosses above here, enter. If it falls below here, exit. And that's it. Don't bother me otherwise. And that worked out very well for him. So if he was able to do it, we can still do it. And his style wasn't really, well, what I would consider position trading, where you're holding for years. Like he was doing swing trading for the most part, like momentum style. Uh, so it's definitely doable. What we want to, or what I would recommend too, is getting very clear on what your goals are, right? And so, like, all these things are moving targets. So it's good to do this kind of exercise semi regularly, especially when there's a major life event like what you have happening right now. So number one would be getting clear on your goals. Number two, getting clear on your beliefs about trading, your beliefs about money. Um, and then number three would be getting clear on your ability to execute. Well, what are you able to execute? Once you have those three things, then you'll be good to go, and you'll be aligned with your system and being able to execute it well. So hope that helps. Hope you enjoyed this live stream. We are now over the hour mark. I'd like to say thank you all so much for being here with me today, being here for a little bit of an extended session. And I'll see you back here again next week for some more live shows. All right, everybody. Take care. Be well. Peace out. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.